Hi guys, welcome back to this channel. So in today's session, I'm going to be teaching us on how to record our petty expenses, or basically how to manage petty cash. All right, so I see that a lot of persons have challenges in how to manage this petty cash, thereby leading to what we call commingling of funds. And as a result, I deem it fit to come and make this video so as to explain the simple process of how you can successfully manage your petty cash expense, and at the same time your account, your books of account will still be intact. All right, so but before I go further, there are a few terms that I would like to explain so that we understand what exactly we are doing. So the first thing I want to explain is interest, right? Interest. And this next one is petty expense. Petty expense. All right. So what is the meaning of interest? So interest is a small amount of money that is being withdrawn from the company's bank account. All right. To be kept for petty expenses. Now, what are petty expenses? Petty expenses are small day-to-day expenses that are probably being made by cash. All right, that are probably being made by cash. Okay, so these are petty expenses. I come again. Interest is a small amount of money, right, that is being withdrawn and kept for petty expenses. That is being withdrawn and kept for what? For petty expenses. What are petty expenses? Petty expenses are expenses that are carried out, very meager amount of expenses, like day to day. For example, we want to purchase fuel. Okay, it might be petty depending on, yeah. And again, what is being regarded as petty is based on the threshold of the company. There might be a threshold that, okay, if the expense goes beyond 10,000 naira, all right, it should pass through the company's main bank account. If it goes above 50,000 naira, it should pass through the company's main company account, depending on what is the threshold of your company. But in general term, which is generally acceptable, petty expenses are little expenses, right? Little expenses. Okay, and interest is a small amount of money that is being withdrawn from the bank. Now, this is where the conflict is coming from. I discovered that a couple of companies, right, they make sales, and sometimes they make from the sales that they have made, right, they make expenses, running expenses from it. For example, for those that sometimes collect cash from sales made, right? Let's say a sales was made for 200,000, and a cash was given, right? Now, some persons collect out of this cash, right, to make expense, to make petty expense. For example, they want to purchase fuel of 50,000. They take 50,000 from that cash to go and make petty expenses. Now, as much as this is not completely, how do we put it, it's not completely wrong, it is not the best practice, right? It is not the best practice. It doesn't mean that the accounts cannot be reconciled. Okay, it doesn't mean that when professionals pick up your books of accounts, all right, um we can't reconcile. No, that's far from it, but it only makes the job um more difficult, right? It only makes the job a little bit more difficult, right? Because in that case, there will be so much of what we call commingling of funds. There will be so much of what we call commingling of funds. All right, so the best practice is what I want to explain to you on this video. So I expect you to stay and listen to this video till the end of it. Either you are a practicing accountant, you are a student accountant that just graduated, you are a cashier, or you are a finance manager, or you are a manager of any company of any regard. All right, it is important that you stay and watch till the end of this video, and don't forget to drop your comment in the comment section. I want to see your comment, right? What do you think about this video? What do you think? Do you have reservations? Do you have contributions? Do you have contradictions? So I need you to drop it on the comment section. So right now, the best practice is what I want to teach you. Now, the first thing to do, the right and the best practice in managing your petty expense is this. The first point that it starts from is there must be an imprest. There must be an imprest account. It is either, let's take for example, if the company is making use of UBA as the main business bank account, all right, there should be a separate, like an account that is used for petty expenses. Yeah, right? And when sales are being made, it is not advisable to pick from your sales figure, from a sales revenue, right? And make petty expenses from it. Why? Because it is expected that every sales amount should hit the bank statement for proper and easy reconciliation. All right, every sales figure, if it was 400,000 that was made at sales, right, we should see it hit the bank account, whether net or gross. We should see it hit the bank account, right? If it's 300,000 that was made from sales, we should see it hit the bank account. Now, if cash is being collected, let's say 200,000 cash was being collected for sales made, it is advised that that 200,000 should be deposited to the bank. It is best practice that that cash should be deposited. You can do it on daily basis, you can do it on weekly basis, depending on what works for you. All right, I know that a couple of companies, like those the the business guys in big markets, sometimes they just cannot do without collecting this physical cash. All right, now when you collect it, what is the practice? If you are the one watching, draw your accountant to come and listen. All right, now what is the practice? Every cash sale should be deposited. Let it hit the business bank account either daily or weekly. Now, when how do we now cater for petty expenses? Now, it is appropriate that you always withdraw imprest, which is a small amount of money, from the business bank account. If the threshold is about 100K on weekly basis, or 200, depending on the volume of petty expenses that you do in your office, right? If the threshold is 100K, like you spend around 100K, so you can always, the cashier can always make a request, right? A requisition to get 100K, all right, to be used for petty expenses. First thing first, a requisition will be drawn for that, like a formal request, depending on how it's being done in your office, right? After all reviews have been carried out on the request, right? Where we have the preparer, the whoever is going to review it will review it, whoever is going to approve it will approve it. Once it has been approved, right, that money is supposed to be moved from the business bank account, either to cash or to a mini account that they use in performing these petty expenses from day to day. Are we communicating? So now that is how it's supposed to be. Then from the petty expense account, that is from where you should be spending for other petty expenses that do not pass through the main business bank account. Because if um if you begin to spend petty expenses from the main business bank account, like you begin to post it right from your system, right? You're going to have serious issues with reconciliation, right? You're going to have serious reconciliation issues. Why? Because those small amount of money, we are not hitting the bank account in real time. They were not hitting the bank account in real time. Instead, the money was moved to petty cash, and the small petty expense were now being carried out from that petty cash account. Now, this is the first process. So to do this, the first thing to do is, once a request has been made, like say you are the cashier, you are the accountant, whoever you are, and you are responsible for handling your cash expense, all right, the petty cash management, you are going to make a request. Whatever is the pattern of your request in your office, you make the request. Once you have made the request, right, and it has been approved, it has been approved, right, and the money has been, this is the first entry that you need to pass. I'm using Sage 50, all right. You can use Sage 50, any accounting software, all right. This process is just the same anywhere: QuickBooks, Tally, Zoho Books, SAP, Oracle, etc. All right, so the process is just the same. So the first thing, I'm going to move the money as though I'm making payments, right? For Sage 50, I'm going to go to task. When you go to tax and you locate write checks, write checks, right? You go to write checks. So the first thing, this dialog box will appear. When this dialog box appear, the first thing you want to select who is the vendor. So in this case, you must have created the cashier or the accountant or whoever is responsible for collecting this money, which is a staff, right? So I must have created that person. In this case, the cashier is a person and her name is Lillian Okafor. So on my system, can you see that I have Lillian Okafor? All right. So I'm going to select as the vendor ID cashier, who is Lillian Okafor. We are paying this money to Lillian Okafor, or it was Lillian Okafor that made requests for the imprest. All right. So now the usual thing, the dates. I'm going to put the dates. Let me choose today's date. Today is March the 18th. March the 18th. Yes. All right. So the next thing is, from which account is this money coming out from? Which account is it coming out? Which account? Now, the business bank account in this case is UBA, right? The business bank account in this case is what? Is UBA. So I'm going to select UBA. Now, remember that for every debit entry, there must be a corresponding credit entry and vice versa. All right. So now I have credited UBA, that is, the money is leaving the UBA account. Now, where is it going to? It should be debited to the petty cash account, right? It should be debited to the petty cash account. So I'm going to come here, choose the expense account to be, sorry, I need to close this. I think this was open unexpectedly, right? I'm going to come here, this expense account, I'm going to select petty cash. All right, I'm going to select petty cash. Petty cash, I created petty cash here as other current assets. Do you know why? Because I believe it's just a movement, all right, from the main business account to a petty cash account, which is still the money, which still belongs to the company. All right, which still belongs to the company. So I've selected petty cash. Now that I've selected petty cash, I may choose to put description, which is being amount of interest withdrawn, right? Being amount, I just put interest, right? Interest withdrawn. Once I am done with this, I'm going to click on save, right? So once I click on save, you will see that the petty cash account would have increased with the amount that we let's check that again. Let's go to tax. You go to write checks. Let's say the list of checks that we have written. I want to check the one we just did. Okay, this is, let me change the period to March. All right, see, we just made. So we didn't put amount. So let's put amount. Let's like how much do we withdraw? Let's say the threshold for the company is 150,000. Let's say on weekly basis, their petty expenses used to run close to around 150k. So after doing all of this process has completed a double entry principle, which says for every debit entry, there must be a corresponding credit entry and vice versa. It has also completed a principle that says credit credit the giver, debit the receiver. Right? So in this case, the petty cash is the receiver. That was why we debited it, right? That was why we debited it, and that is an impress that we withdrew from the bank. Now, the next thing to do is to save. Once we are done, you just to click on save, right? Now that we have saved this payment, something has happened. The petty cash account has increased. So if you go to your statement of financial position, right? If you go to your statement of financial position, you would see that the petty cash must have increased by 150,000. Let me see. These are at February. Let me see as at let's see as at March, right? As at March, you would see that the petty cash account would have increased by 150k. Can you see that the petty cash account is now 150,000? There was nothing there before. So when the cashier requested for imprest, right, 150,000 was moved from this UBA, right, to the petty cash account. All right, we don't know the petty cash account. You might want to use OP or Money Point or any other account that is not the main business bank account for it, or the money was withdrawn as cash. All right, so that is the first process. Now, as you keep spending this money, what do you now do? So there are two ways to record it. Right? So it is either you pass journal, right, for the petty expenses. For example, the first expense that wants to be made, let's say they want to purchase fuel for 55,000 naira. All right, and the threshold still says that 55,000 naira expense should pass through petty cash expense. All right, so it is either a journal is being raised for them either on daily basis or monthly basis. All right, that is, we'll be removing the money from petty cash account, that is crediting petty cash account, and we'll now be debiting the exact expense head. All right, that is the process. So, or we go through the process of making payments, because in this case I created petty cash as what, as other current assets, right? Other current assets. So it is either we keep making the payment like this, that is saying I'm going to who is receiving the money, all of these processes. All right, you have to be bringing down the names of the vendors that this money is being paid to, or you create a name called general vendor. All right, and you keep, in this case you will now be crediting petty cash, right? You credit petty cash, you credit petty cash, right? And you now debit the exact expense at how much? 55,000. What do they want to do? They want to pay for what? For purchase of fuel, either by cash or the mini petty cash expense account. So I'm going to debit the fuel and lubricant, or yes, fuel and lubricant. So I'm going to debit it. So this is one way of now managing the funds. As we spend this money now, you see that the petty cash account would have reduced by 55,000. Let's save this. Once I save, I'll click on save, right? Now let's see the effect in the statement of financial position. When I go back there, click on this, can you see that 55,000 naira has left 1 minute. Let me choose range. Let me put it till this current month. Can you see that 55,000 naira has left the petty cash account? So the petty cash account is now remaining 95,000. That is one way. Now, another way of doing it, because I know that some companies, right, or they deal in the process of spending this small amount of money, they do it through cash. All right. What another way you can do, you can also be recording them through the use of journal entries, right? As the cashier keeps his or her manual record or through in Excel sheets, right? At the end of each day or week, she should come and pass a journal entry. All right, you should go to general journal entry. For example, if for the week we have spent from the we have spent from the petty cash account a list of minor expenses, we are going to record it either daily or weekly. So to do this, I'm going to come here and say, okay, one, and which account is the money entering, meaning the expenses that were being incurred. Let's take, for example, there was a repair and maintenance of about 35,000. I'm going to debit repair and maintenance accounts with 35,000, right? Again, if there was what else? Let's check. If there was which other expense should we? If there was a payment of electricity by cash or through that petty cash account, let's say it was a meager amount of money, they recharge their prepaid with about 10,000 naira. All right, I'm going to debit it. Now the total here is 45,000. Let's say this is for the week or for the day, right? I can now credit the petty cash account with this same 45,000. I'm going to pick petty cash account. Then I will now credit it with 45,000 naira. So you can see that the debit side is now equal to the credit side. I can now click on save. Now, once I have done this, to check the effect, let's go to the balance sheet again. Financial statements, then I'll click on balance sheet. Right? Let me select range to cover this period. 1 minute. Cover this period. Okay. So, can you see what has happened to the petty cash account? The petty cash account is now remaining 50,000. That is 150,000 minus 55,000 for fuel and lubricants, and minus 45,000, right? That's minus 45 plus 55, that's 100,000 minus 100,000, so it's remaining 50,000 naira. So that is a simple process of managing your petty cash expenses. With this, your main business bank account will not be messed up. All right, your main business bank account will not be messed up. So this is the process of managing petty cash expense. This is how it keeps happening on and on and on and on and on. All right. So now, if you have any question, don't forget to drop it on the comment section. You can also comment. All right. Drop a comment what you think about this video, and don't forget to subscribe to this channel. Thank you.